Let me tell you about a mountain. Not just any mountain, a mountain that has produced more gold than any other place in human history. A mountain so rich that the Spanish word for it became synonymous with unimaginable wealth. Cerro Rico, the rich hill, Potosí. For 300 years, silver flowed from this mountain to Spain, funding empires, wars, and the birth of global capitalism. 8 million indigenous workers died extracting it. The wealth built palaces in Madrid while the Andes filled with bones. That was the 16th century. You'd think we'd learned something since then. They haven't. Today, Peru sits on mineral wealth that makes Potosi look like pocket change. Gold, silver, copper, zinc, lithium. The mountains are literally made of money. Peru is the largest gold producer in Latin America, 6th largest in the world. The country has exported over $50 billion in gold in the last decade alone. That's more gold than currently sits in Fort Knox. And yet, over 25% of Peruvians live in poverty. In mining regions, the poverty rate is higher than the national average. The communities sitting on top of the gold are poorer than communities with no gold at all. How is this possible? How do you have more treasure than a dragon's hoard and still can't afford to pave roads or staff hospitals? The answer is a story about theft, but not the kind you're thinking of. Not bandits with masks, something more sophisticated, more systemic, more complete. This is the story of the stolen mountain, how Peru's gold leaves the country without ever touching the people who own it. 1. The curse is real. Economists have a name for this, the resource curse, or the paradox of plenty. The theory is simple and brutal. Countries with abundant natural resources often grow slower, have more corruption, and experience more conflict than countries without resources. The blessing becomes a curse. It sounds counterintuitive. More wealth should mean more development, right? Wrong. And Peru is the textbook case. Here's how the curse works. When a country discovers valuable resources, money floods in, but that money doesn't distribute evenly. It concentrates around the extraction point, the mine, the oil field, the port. A small elite captures most of the value. They use that wealth to capture political power. They use political power to protect their wealth. Meanwhile, other sectors of the economy wither. Why invest in manufacturing when mining is so profitable? Why develop agriculture when you can import food with mining revenue? The economy becomes a one-trick pony, dependent on global commodity prices it can't control. And when those prices fall, everything falls. Peru has lived this cycle over and over. Silver in colonial times, guano in the 19th century, copper and gold today. Each boom promises transformation. Each bust leaves the country poorer than before. The resources are real, the wealth is real, but somehow the development never arrives. 2. The legal extraction machine. Let's follow the gold. A major international mining company, let's call them Global Gold, discovers a deposit in the Peruvian highlands. The deposit contains an estimated 20 million ounces of gold. At current prices, that's roughly $40 billion in the ground. Global Gold negotiates with the Peruvian government. They sign a stability agreement that locks in tax rates and regulations for 15 years. The company argues this is necessary for investment security. The government agrees because they want the jobs and the foreign exchange. The mine opens. Thousands of workers are hired, mostly for construction. Once operational, the permanent workforce is much smaller. Highly paid engineers and managers are often foreigners. Local workers get lower skilled jobs. The gold comes out of the ground. It's processed on site, turned into doré bars. The bars are flown directly to refineries in Switzerland. They never pass through Peruvian hands except as raw material. Global Gold reports its revenues. But here's where it gets interesting. The company has subsidiaries in Luxembourg, the Netherlands, and Singapore. Through a practice called transfer pricing, they sell the gold to their own subsidiary at a low price, reducing their taxable profit in Peru. The subsidiary then sells at market price, booking the profit in a low-tax jurisdiction. Royalties? Peru charges 1% to 3% depending on the commodity. Compare that to the 10% to 15% common in other resource-rich countries. Income tax? The statutory rate is 29.5%, but effective rates are much lower after deductions for reinvestment and depreciation. Many mines pay effective rates under 15%. And the stability agreements mean Peru can't change these terms even if they realize they got a bad deal. By the time the gold reaches a Swiss vault, Peru has captured perhaps 10% to 15% of its value. The rest is in the hands of shareholders in New York, London, and Toronto. This is legal. This is the system working as designed. 3. The illegal extraction machine. Now, let's talk about the other gold economy. The one that doesn't sign contracts or pay any taxes at all. Illegal gold mining in Peru is a $3 billion annual industry. Some estimates put it higher. It's the country's largest source of illegal revenue, bigger than cocaine. The epicenter is Madre de Dios, a region in the Amazon basin. Satellite images show lunar landscapes where rainforest used to be. Rivers run orange with sediment. Mercury, used to separate gold from ore, poisons the water and the people. Over 100,000 people work in illegal mining. Many are desperate migrants from the highlands. They work in conditions that would be illegal anywhere in the developed world. Cave-ins, mercury exposure, violence. Life expectancy in illegal mining camps is short. The gold they produce enters the legal market through a process called laundering. Small refineries buy gold with no questions asked. They mix illegal gold with legal gold. Documentation is forged. Once the gold is in a bar, its origin is untraceable. Much of this gold ends up in the same Swiss refineries as legal gold. The Swiss import over $3 billion in gold from Peru annually. The documented production doesn't match the export numbers. The gap is the illegal gold, washed clean by the international financial system. Who benefits? Not the miners, who barely survive. Not the local communities, who suffer the environmental destruction. Not the Peruvian state, which receives nothing. The benefits flow to the middlemen, the refineries, and ultimately to consumers worldwide who buy gold jewelry with no idea that rainforest was destroyed and workers were poisoned to make it. 4. The Madre de Dios nightmare. I want to take you to La Pampa. It's a region within Madre de Dios, about the size of a major city, that has been completely destroyed by illegal mining. What was once primary rainforest, some of the most biodiverse territory on Earth, is now a wasteland of pits, pools, and mercury-laced mud. The destruction accelerated dramatically over the past 15 years, driven by soaring gold prices. When gold hit $1,900 an ounce, the invasion intensified. Tens of thousands of miners flooded in. The Peruvian government's response has been sporadic military operations. They burn equipment, arrest some miners, declare victory. Within weeks, the miners return. The profit margin is too high. The desperation is too deep. But the environmental damage is permanent. Mercury from illegal mining has contaminated the entire food chain. Fish in Madre de Dios rivers contain mercury levels many times above safe limits. Indigenous communities who depend on fish are being slowly poisoned. Studies have found dangerous mercury levels in children who have never been near a mine. The deforestation contributes to climate change, destroys habitat for countless species, and degrades the Amazon's capacity to regulate continental weather patterns. The total cost of this environmental destruction is incalculable. What we do know is that it far exceeds the value of the gold extracted. Peru is trading long-term ecological wealth for short-term gold that mostly leaves the country anyway. 5. The missing cannon, where the money should go. Peru has a mechanism that should distribute mining wealth to local communities. It's called the Canon Minero. Here's how it's supposed to work. Mining companies pay royalties and income taxes to the central government. Half of that revenue is then transferred back to the regions where the mining occurs. The regional and local governments are supposed to use this money for development: schools, hospitals, roads, water systems. In theory, communities living with the environmental and social impacts of mining should at least benefit from the revenue. The mountain in your backyard might be destroyed, but at least you'd have a new hospital. In practice, the canon system is a catastrophe. Regional governments receive large sums of money they are unprepared to spend. Peru has consistently ranked among the worst in Latin America for executing public investment budgets. Regions return billions of sols to the central government unspent because they couldn't design and implement projects. When money is spent, corruption consumes enormous portions. Investigation after investigation reveals phantom projects, inflated contracts, and outright theft. Governor after governor goes to prison. The pattern continues. The results speak for themselves. In Cajamarca, site of the massive Yanacocha gold mine, the poverty rate is above 40%. The region has received billions in canon revenue over 2 decades. The roads are still bad. The hospitals are still under-equipped. The schools are still failing. The gold came out of Cajamarca's mountains. The wealth went everywhere except to Cajamarca's people. 6. The political economy of extraction. Why doesn't Peru fix this? The question assumes someone wants to fix it. Look at who benefits from the current system, and the persistence makes more sense. International mining companies benefit from low royalties and favorable tax treatment. They spend heavily on lobbying. They fund think tanks that argue against higher taxes. They warn that investment will flee if terms change. Peruvian politicians benefit from the status quo. Campaign financing in Peru is notoriously opaque. Mining companies and mining-adjacent businesses are major donors. Politicians who push for reform find their campaigns suddenly underfunded. Regional elites benefit from the canon system, corrupt as it is. Control over government spending creates opportunities for patronage and theft. A functional system would reduce their power. And illegal mining generates its own political protection. Miners vote, middlemen pay bribes. Entire regional economies depend on illegal gold. Politicians who crack down too hard lose elections or worse. The people who lose, the poor communities, the indigenous groups, the general public, are dispersed and disorganized. They lack the concentrated power to change a system that concentrated interests defend. This is the political economy of the resource curse. The resource generates wealth. The wealth generates power. The power protects the wealth. The cycle perpetuates. 7. The conflicts that never end. Mining in Peru isn't just an economic issue, it's a conflict issue. The Defensoría del Pueblo, Peru's ombudsman office, tracks social conflicts. Consistently, 60% to 70% of all conflicts in Peru are related to extractive industries. Mining is by far the largest source. These conflicts follow a pattern. A company announces a project. Local communities, often indigenous or peasant farmers, express concerns about water, land, and pollution. The company makes promises. The government approves the project. The promises are broken or insufficient. Protests begin. Violence occurs. People die. The Conga project in Cajamarca, Tia Maria in Arequipa, Las Bambas in Apurímac. The names change. The story repeats. Between 2006 and 2020, over 100 people died in mining-related conflicts in Peru. Thousands were injured. The violence comes from both sides. Protesters blocking roads, police and private security responding with force. And the conflicts rarely resolve the underlying issues. Projects are delayed, but eventually proceed. Communities receive small compensations that don't address long-term impacts. The resentment festers until the next conflict. This is what economists call a social license to operate. Mining companies in Peru don't have it. They extract despite opposition, not with consent. The result is permanent low-grade warfare between communities and companies, with the state often siding with capital. 8. The Odebrecht method, corruption perfected. If you want to understand Peruvian corruption, you need to understand Odebrecht. The Brazilian construction giant operated throughout Latin America. In Peru, they built major infrastructure projects. They also systematically bribed every president for 2 decades. The scale was staggering. Over $30 million in documented bribes to Peruvian officials. Payments to Alejandro Toledo, Alan Garcia, Ollanta Humala, and officials connected to every major political party. When the scandal broke, it didn't just expose Odebrecht, it exposed the entire system. Peruvian politics runs on informal money. Campaign finance laws are weak and weakly enforced. Mining companies, construction firms, and other interests pay to play. The payments create obligations. The obligations shape policy. 4 of Peru's last 6 presidents have faced serious corruption charges or investigations. The political class is so thoroughly compromised that it's difficult to find anyone clean. This corruption isn't separate from the resource curse, it's part of the same system. Mining wealth creates opportunities for corruption. Corruption ensures the wealth is extracted without benefit to the public. The public loses trust in institutions. The institutions become more corrupt. The cycle deepens. Peru doesn't lack resources. It doesn't lack technical knowledge. It lacks functional institutions that could translate resource wealth into public benefit. And the resources themselves make building those institutions harder. 9. What functional looks like. Is there an alternative? Can resource-rich countries escape the curse? Some have. Norway discovered oil in the 1960 seconds. They created a sovereign wealth fund that now holds over $1.5 trillion. Norwegian citizens are among the richest in the world. The government invests the returns, not the principal, ensuring the wealth benefits future generations. Botswana discovered diamonds in the 1970 seconds. Despite being one of the poorest countries on earth at independence, they built functional institutions, invested in education and healthcare, and achieved middle-income status within decades. Chile has copper. They created stabilization funds, saving during booms to spend during busts. Chilean poverty fell dramatically. The country approached developed nation status before recent political turmoil. What do these success stories have in common? Strong institutions that existed before or were built alongside resource extraction, independent judiciaries that could enforce contracts and punish corruption, civil services that could design and implement projects, political systems that, however imperfect, translated public preferences into policy. Peru has none of these, and here's the vicious cycle. Building strong institutions requires political will, but the resource wealth undermines the political incentives to build institutions. Why reform when the current system generates such profits for those in power? 10. The lithium question. There's a new chapter being written right now. Peru has lithium. The mountains that gave gold and silver to the Spanish contain the metal essential for batteries, electric vehicles, and the energy transition. The Puno region, already site of social conflict over mining, sits on significant lithium deposits. Companies are circling. The government is drafting regulations. The future is being negotiated. Will Peru learn from its gold experience? The early signs aren't encouraging. The same dynamics are emerging. International companies seeking favorable terms, communities worried about water and land, politicians looking for quick revenue, no comprehensive strategy for capturing value and building the economy beyond extraction. Lithium could be different. The global energy transition creates massive demand. Countries that control lithium have leverage. Bolivia and Chile are already leveraging their deposits for better terms, joint ventures, and domestic processing requirements. But leverage requires institutional capacity to use it. Peru would need to negotiate effectively, enforce agreements, and invest revenue wisely. Based on the gold experience, there's little reason for optimism. The Stolen Mountain might have a sequel, The Stolen Battery. 11. The real theft. Here's what I want you to understand. The theft of Peru's gold isn't primarily illegal. Most of it is perfectly legal. It's the legal system that's the theft. The contracts that let multinationals pay minimal taxes, the trade rules that let gold leave without processing, the international financial system that facilitates transfer pricing, the consumer markets that buy gold without asking where it came from. This is a global system that extracts wealth from resource-rich poor countries and transfers it to resource-poor rich countries. Peru is a victim of this system, but the system was built with Peru's participation by elites who benefit from it. The illegal mining is a symptom. When the legal system captures so little value and distributes even less to local communities, illegal extraction becomes rational. Why respect a system that gives you nothing? The violence is a symptom. When communities see their mountains destroyed and receive only pollution in return, resistance is rational. When the state sides with companies against its own citizens, conflict is inevitable. The poverty is a symptom. When wealth flows out faster than it can be captured, when institutions exist to facilitate extraction rather than development, poverty persists regardless of what's in the ground. Peru doesn't have a gold problem. Peru has a power problem. The power to capture resource wealth, to translate it into public benefit, to build institutions that serve citizens rather than extractors. That power doesn't exist, and the resources themselves make it harder to build. Conclusion: the mountain still bleeds. The Spanish have a saying, "Veil on Potosi." It's worth a Potosi. It means something is incredibly valuable. The irony is bitter. Potosi made Spain rich and left Bolivia, where the mountain actually is, as the poorest country in South America. The value went one direction, the poverty stayed behind. 500 years later, the pattern continues. Peru's mountains produce gold that ends up in vaults in Zurich and on fingers in Manhattan. The communities sitting on the gold live without running water. The rivers run poisoned, the forests fall. And everyone pretends this is normal, this is development, this is how the world works. It doesn't have to be this way. Other countries have proven that resources can be blessings rather than curses. But making that happen requires political change, institutional development, and a fundamental renegotiation of who benefits from what's in the ground. Peru's gold will keep flowing. The question is whether the Peruvian people will ever see meaningful benefit from their own birthright. For now, the mountain still bleeds gold, and the wealth still flows away. If this made you think differently about where your gold comes from, hit that subscribe button, because understanding these systems is the first step to changing them. See you in the comments, and remember, economics isn't just about wealth, it's about who gets to keep it.